This is Isaac coming at you with another video. I just want to share a very exciting trade I just took. It's not a setup that I take often. As a matter of fact, I do not remember the last time I actually took this setup, but it is something that I've noticed in the market, and I think that's really how you get your start getting better at setups. It just takes a lot of time, but you notice certain things happening and they kind of make an imprint in your mind after a while, and you start to visualize and remember certain types of patterns that happen in certain types of places. So case in point, big sell-off in the market today. This morning, it's early, it's Globex, it's 5:07 New York right now. I'm an early riser. And I could see that this Globex session, which is in the light shaded kind of purple here, doing a lot of selling. Which typically I really like as a day trader. I really do enjoy it. The downside, it just feels so much easier to me. My touch points seem to work better. Price tends to fall faster than it rises, so I get away from my entry more quickly, which gives me a risk-free trade much more quickly and much more often. So everything about selling the market I really like, but sometimes you have to buy. You just have to, because you know that it's bouncing and you really don't want to miss out on that opportunity. But buying is, to me, is much more difficult than selling is, because the price action to the upside is much choppier, it's much more jagged, a lot more pullbacks, deeper pullbacks on the way up, and it's just tough. So the entries have to be pinpoint so that you can move away from your entry quickly and get to a risk-free trade. And you know, you don't want to get stopped out constantly, so even break even. So I think your entries have to be much more strategic maybe than they do on the downside. So case in point, this morning I saw the market selling off quite a bit. I took a couple stabs at it. I got stopped out, kind of keeping tight stops, keeping tight break even stops, and didn't really, my analysis was spot on, but my execution was maybe not so. Management was not that profitable. I didn't lose money, but I didn't make it. Had 2 or 3 scratch trades basically. So anyway, but we're getting down. I could notice here that we were getting down into this area that we bottomed out at before and took a big jump at on Friday, November 7th, and today is Thursday. Today's Friday, November 14th. I'm sorry. So we had a week ago. We had a big bounce off this area in the middle of the New York session. So I definitely marked it on my chart and made put a big green line on it and said swing low, 709 and a quarter. Like I was watching that area, right? So this is a 15-minute chart, and this is right now it's a 30-second chart. So I remember when price was kind of headed down towards this area. I can't tell you how many times in the past, before I had much of any skill. I'm not saying I have a ton of skill now, but I have a little bit more than I used to have. I would think, oh, this is an area, it's going to bounce off this area. It bounced before, so I'm thinking the second, I used to think this. I used to think the second that it hits this big swing low from a week ago, it's just going to bounce right off it, and so, so I would put a limit order, thinking it was going to do the same thing it did last time. I would put a limit order right there, and then what would it do? It would just flush me out, right? Immediately run stops and do all this stuff, right? So it probably made that mistake 10 times or something like in that range, before I finally realized, well, okay, you need to have, you can't put limit orders just because you think something might happen there. Something will happen there, but you need to be very strategic about it. So what I started to notice a lot about these key support zones and support levels is a pattern that would occur. And I even drew it on my chart today and erased it already. But the pattern that I've noticed that occurs when you get to a swing low point like this, that you've had a big bounce off this level before, usually what you'll see is price will come down like this and then put in an inverse head and shoulders, right? So it would bounce off it, come down, find another support level. In this case, I thought it would be the 77, and it was. Come up, put in the right shoulder, and head up from there. So in other words, this level acts as a neckline for the inverse head and shoulders. So I drew this pattern on here today thinking that could very well happen, you know. It really could. And so price, I took my eyes off the charts for a few minutes, went and did something else, came back, and price had already flushed right through there. So we didn't get the left shoulder on that. We did not get the left shoulder in that, but no big deal. It did bounce off the 77. I talk about 26 and 77 all the time in these videos. It bounced, did put like a kind of a double bottom here off this 77 level right here. Just kind of go 1, 2, W pattern there, double bottom, and headed up. And that's when I started paying a lot closer attention to it. So I'm sitting there looking at it and trying to figure out if I want to trade this, if I think it's going to really bounce. And I really did think it would. So not thinking about what I had just done and designed, the pattern I just designed a little while ago, I started looking at this area right here, first off. And it looked to me like it was building a base right here. And I thought, well, you're above that area, and it's building a base up above that area. And, you know, we've already bounced off the signal line, which is the 5-minute 7 through 9 EMA 2 times right here. And these were both excellent shorts, by the way. This is much more my style of trading, selling these rallies up to these key resistance levels, like these, like this signal line, for example, or like this gold, first touch of this gold 20, or this first touch of this gold 10, 1 minute 10, 1 minute 20, first touch to the 5, second touch to the 5, 5 minute 9, second touch to the 5, 9. These kinds of trades. Okay, so anyway, in my mind, I'm like, I've already tested this level 2 times. All right, so it's a pretty good chance that it might just bust through that level. So I did go ahead and get long on this one right here, and it came up and it came over the cloud, the signal cloud, and it turned around and took me out break even. And then I started thinking, oh yeah, that thing I just drew on the chart about 15-20 minutes ago. How about that, you know? So I said to myself, okay, why don't I go ahead, and this time I will put a limit order on, because it's already breached, it's already come up, and it's ready to make that right shoulder. Even if it didn't make a left shoulder, it's ready to make a right shoulder. So I said, I'll put a very tight stop on it. I'll put a limit order here at about 7:11. Let's see, I'll tell you exactly where I actually got in. I'll tell you exactly where that last trade entered was. Entry price was 710.75. 710.75. So I was literally putting a limit order in just above that level. 710.75. Right there. Right there. And I remember putting a stop right under, like at that 08. So I was literally risking 3 points on 10 micros. 3 points on 10 micros is all I was risking. And I figured, you know what, I can afford it. Take that kind of a loss. I'm not going to sweat it. That's about 60, 70 bucks, something like that. It's not going to be a big deal. So sure enough, and if you hear excitement in my voice, I am excited, because, you know, in trading, when a plan comes together and a plan works, it's really a big deal. And especially if you get a great trade out of it. You know, you get like quite a few points out of it. And that's just exactly what happened. So I said, this time I'm gonna divide my lot in 2. And so if I get a fill, if I get a couple of points, 3, 4, 5, 6 points on it, I'm gonna sell the first lot and then move my stop under my entry, so it gives me breathing room, okay? Because a lot of times I don't do that, because I'm like, I want all the lots. You know, I want to make profit on the whole thing. I don't want to divide it and kill the first half like for a tiny profit. Sometimes you just got to do it, man, because price oscillates, okay? Price comes back and forth, and if your entry is here, you know, and you go up like 15, 20 points, you're like, all right, we're off to the races. I'm moving my stop to break even, okay? And then the next thing that happens is that price comes up, comes right back down to your entry, stops you at break even. Guess what? You just missed this whole move. Okay, so you don't necessarily always want to do that. There are times not to divide your lot in 2, not to do it, but there are times to do it. And when you're going long, you really got to do it, man, because look at these long pullbacks. I mean, look at this one. I actually survived this pullback right here. This one right here. It went all the way up here. Okay, but I had my stop moved I didn't move my stop up too fast, right? And then it came all the way back down here, which is 25 points about, and I still had my stop down here under these lines, pretty close to, not too far from my entry, you know, because I really wanted to let it go up to the 77. I thought it would go up to 77 up here. It never did. It got close, and I got out pretty close to the top, but see how it came back to that swing, that entry point again one more time. So anyway, I got in here. I sold a little bit at 14.50, which is about right. Yeah, just 3-4 points away, and then I held my stop back under, well under the entry, so that I would at least break even if it pulled back. It did pull back to entry, just above entry, and then it took off to the races. It went up here, made a big pullback here, tried to stop out a bunch of guys, and then it pushed up towards 77. Now, this is where I had to make a decision. I put my target at 74.50. It made it up to 65.25, and then I could see that it was rolling hard at that point, and I went ahead and got out at 53. So basically, I made about $450 off of the. I made about $450, I believe, off of that one trade. That's not bad for trading in micros. I mean, if I do say so myself. I mean, I'll take that any day of the week with a $60 or $70 risk. I mean, come on, guys, that's like a 7-to-1, right? That is a good risk to reward ratio. That's the type of risk reward ratio you always want to have, Lose 60 or 70, make 450. I think so. Yeah, I think that's okay. So keep that in mind. Like, if you can get your entries pinpoint to where you've seen patterns develop over time, you put confidence in these patterns because you've seen them over and over and over and over again, and then you're willing just to risk a few dollars on the pattern and just see if it works out, get to a break even quickly, and then hold your stop back for the inevitable big shakeout that happens about halfway up to the target. Then all of a sudden you're making 7-to-1. And you can stay alive as a trader a long time when you're risking less than $100, but you're making almost 500 per trade. Okay, so just a few observations there about a trade I'm quite excited about that I just took. I wanted to share that with you so you have the information. All right, thanks a lot, and I'll see you on the next one. Please subscribe. This channel is just getting started. I'm finding that by making videos, my trading is getting a lot better. So I'm going to try to make videos almost every day on good winning trades and explain the thought process behind them. Okay? Thanks a whole bunch, and I'll talk to you later.